What's up everybody, Tom here with another video. In today's video, we'll be talking about why this close is the most important to the stock market right now. We'll also be talking about our technical analysis for the S&P 500, Nasdaq, Bitcoin, Ethereum, Tesla, and more. US jobs numbers were out. They look pretty good in principle, but is there a secret lying behind the numbers? Stay tuned. Alright guys, well as we like to do on the channel, let's take a look at a heat map for the S&P 500 to get an idea of what was happening in stocks last week. And it's clear to see that tech was back, but specifically big tech. Microsoft, Google, Amazon, Netflix, Disney, all up on the Friday session. Even banks were up, and Tesla surprisingly down a little bit after being up in the session. What I believe this was is people were getting concerned about what was going on with hypergrowth that week coming into the US jobs numbers. So now that we've seen that jobs number, we know that it looked very strong, but it's got a lot of government jobs in it. So really the question then becomes is what's going to happen in April? Well, let's take a look what happened with the Nasdaq on Friday. 1.82% up. Of course, the Russell also performing well, 1.27% up. And then the S&P 500 being brought along for the ride due to the banks and the tech sector, and the Dow Jones moving only slightly. Let's take a look at the sectors now, and surprisingly, it was all about energy actually. Energy did the best on Friday, followed by tech, followed by communications. Down the bottom, more of the defensive sectors, utilities, consumer staples, those types of things were underperforming for the day. And usually when you see that, it's risk on in the stock markets. Before we get started with the charts though, I want to just quickly talk to anyone that's new out there on the channel right now about how important this month is, and that is April. April is historically the second best month of the year for investing in stocks and the stock market. And this is from 1928 to 2021. If this holds up, we would on average have a decent return in April. And you can see that if you look at the last 10 years, April has been an amazing return. Now it's completely skewed due to 2020 data. However, it's still been an amazing month. The question is, will these historic stats hold up? And it's our job here to try to figure out whether we can see it together on the charts. And that FANG chart we showed at the start of the video certainly is pointing to a good return. We'll talk about that more very, very soon. Let's now go into the charts themselves. What's been going on? Well, firstly, let's take a look at this VIX, the volatility index for the S&P 500. And you can clearly see volatility is theoretically coming out of the market. 17.3 on the close here for the VIX. That's very low. It's fully solidified underneath 20. So it's solidified what effectively is a normalized market from a volatility standpoint. Remember, anything over 20, you're in a very hyper, very volatile market. Anything under 20, you're in a more stabilized, what they would call bull market, I guess you would call it. Dollar index here, 93 on the close. We saw those strong US jobs numbers. And realistically, when you look at them on the surface, it looks amazing. It came in like, what, 200,000 more than expected. It looks great. But just remember, they're going to be mostly government jobs. I haven't had a chance to really dive into those numbers, but I did see how the market reacted. And the market reacted, let's call it, lackluster to it. It wasn't like super bullish and it wasn't super bearish. So overall looks okay, but a lot of those numbers, don't get carried away, there will be new jobs hires from the government. If we go through and have a look at this dollar index and we think, okay, what's happening right now? I've said this trend line a little bit has been holding it up, and 93 is still a good close. Look at the weekly, look at the daily, and you'll notice that 94 becomes the next logical conclusion here. Right there, look at that resistance, resistance, resistance for the dollar index. If it gets through 94, where does it go to? 96. So look, dollar index is firmly back in bull mode. Usually this would mean the stock market is dropping because of course dollar index up means usually risk off because people are moving things into safe assets. But I think this has a lot to do with how much extra pumping of liquidity has gone on in the US versus other countries. You know, here in Australia, where I'm from, we continued our current policy of monetary easing, and that is lowering our dollar when you consider we'd never done that before versus the US. Let's now move over to Bitcoin and talk about what's happening here on the weekend. So it's not all about Bitcoin. I think we're in altcoin season right now through the middle of the year. And you can see here the 20 moving average on the 4-hour remains holding up Bitcoin with decent rejections. But what's more interesting is not even Bitcoin right now. It's actually Ethereum. So Ethereum has 2,136. We have broken through and closed on the daily above 2,000. Now, we did a live stream, a special crypto edition yesterday. If you think you'll ever be interested in those things, remember to subscribe and hit that like button. And we were talking about this close here being higher than any other previous one, and how it already was trajectory looking at breaking 2,000 and moving to 2,200. Now at this point, we're almost already there, 2136. But I do encourage anyone, if you go and watch that video, we go through some really great close stuff to do with cryptocurrencies, including Polkadot, because Polkadot was another one that was looking incredibly strong. And I can tell you at the time of this recording, it's up even more than Ethereum. And that's just because the technicals were looking amazing into them. So now for Ethereum, I guess we move towards the 2,200, 2,300. It looks like we are in altcoin season where BTC is going to hover a little bit more while we wait for all of these other coins to move up. But remember, this coin moving like this is more than just Ethereum. It's pulling all of the alts along. And that is the importance of seeing Ethereum bust through. It creates more hyper movement in all of the alts. And if you see alts that aren't moving yet, that you've been excited about for some time, possibly they then start to drive up. Remember, you get this first wave of all the alts, then as they finish up, the second wave comes through. And if you're new to crypto, that's the type of thing that does happen time and time again. Let's take a look at gold, because gold actually almost reached the exact level we thought it would after it got through that 1720. So gold definitely working very technically right now. 1720 reached, a little bit of sell-off, closes above, gravitates towards 1740, which is exactly where we thought it would be due to resistance, lots of wicks, resistance recently. Exactly the zone. So for the next week, what are we thinking for gold? I'm thinking that it can continue to deal with this resistance a little bit. If it does pull back, let's say it pulls back down to the 1720, it'll probably be met by buying support. Why is that? 20 and 50 exponential moving average on the 4-hour will act as dynamic support. But if we get through 1740, then we can start to talk about 1760. Gold trades $20 increments at this time. Silver's very, very similar. Silver will come across for the ride as long as gold continues its strength. And those are the two scenarios that I see playing out this week. Either a pullback to 1720 met by some buying pressure, I would hope, or a closure above 1740 and then a movement on to the 1760, which was previous lows before all of this crashing occurred. Remember, if you think about it this way on gold, if it does get through and it closes above 17, let's call it 65 or something, what in essence is it doing? Guys, this is a massive double bottom on the daily. Do you know how big that would be? That would mean gold is back in force and it's back as an interesting asset class in the markets for a lot of people. Double bottoms matter. They're the end of the trend and the start of a new trend. So if this level was broken through, I think this is a significant enough zone to think that gold is back, baby, in the markets, and it's going to be pretty exciting because we can start covering it properly on the channel. All this negativity wasn't that great, but when we get back into a positive sign, it's going to be a lot better. Let's move over to Tesla now. Now, Tesla's Friday, I've got to say, it was disappointing. I mean, this candle, like, no one likes this candle, yeah? It didn't quite get to 700, which was the target for most day traders, I think. I think the reason it went down so much is probably because there were options expiring. There was the jobs report coming out. You had Tesla news coming out, which, by the way, was slightly better than expected. I think they produced and delivered a little bit more cars than the consensus, which was about 176,000. I think they did about 185, something like that. You can go search that on the internet right now. But yeah, look, the numbers look good. And I think people were just selling it down to the 660 because they were taking profit for the week. Remember, they could have been getting in underneath $600. They get up here and they're on Thursday and they're thinking, oh, do I want to take it over the weekend? Who trades Tesla? Retail traders trade Tesla predominantly, and there's a lot of options in retail. So the people do tend to close up over the weekend. I think that's a huge portion of it. Nothing really changes with our resistance levels. We've still got 700 and 720 with a closure above 720 really triggering up to the 800 zone, which we'll be watching throughout the week if it does start to occur. And 660 on the close, even with the 658 aftermarket or anything, I think it's fine. It's right around where we previously found buying pressure. So as long as Monday holds and it moves up a little bit, things should be looking okay for the 700, the 720, and hopefully the follow through on Tesla. If it continues its way down and then gets under 600 this week, well, we know it's doomed. It's going to 550, and I would actually suspect even lower if it gets back underneath the 600 and closes. For now, does not look like that's going to happen, and I'll explain why. And it's all about this chart. The FANG, guys. Look at the FANG. It's amazing. Inverse head and shoulders now in play. We have daily closure above, and I can tell you this is way stronger than I expected it was going to be coming into the Thursday session. It was really strong. It ended on its high. It was like, no, we've been just joking with all you guys. Wall Street's been joking with you. We've been stealing your stimulus checks. We've been getting you into hyper stonks, and we've been forcing you out of the market through your leverage plays. And that's unfortunate, but that's what they do. Closure point now achieved. It may pull back a little bit, find previous resistance, which I expect to be support around this 50, 45, 10 area. But now we move towards the next resistance, which is in this case, 4,700. And I think it's going to get even better than that because of the inverse head and shoulders principle. And also when we look at the Nasdaq and you think about the closure, which also is above the 13,300, there's just so much room to grow here for tech. It's been stumbling now for some time. Realistically, a lot of the FANG stocks have been sitting there since November pricing for quite some time, some of them, or even before, even June, July pricing. So there is a movement for those to go up as we see more movement into technology. We see that expansion of everything that's come out of the pandemic start to play out in the numbers. 13,600 remains the resistance this week for the Nasdaq. The QQQ will be really very similar, and we continue to pretty much see closure points above the right levels. This is an inverse head and shoulders. So what do? We take the distance from the head to the neckline. We extrapolate that out. And when you extrapolate this one out, guys, look at excitement. Woo, 14,400 is kind of the achieved level. Or it says 14,36, but probably a 14,4 or even 14,5 level is what this is calling for now over the next couple of months. Will it happen in a week? No, of course not. But would it be able to happen over time? Yeah, I could see something like 13.6, pull back, movement up to just under 14,000, little pullback to 13.6, and then maybe the final leg up. But now I'm going to be looking at SPX more than anything else. And the reason why I'm going to be looking at SPX is our trend line, the trend line of the channel, I'll call this. This trend line has been an amazing support to us of being able to find out where the resistances have been, where the selling pressure is going to come in. And it's been a great day trading tool, great swing trading tool, great everything tool of where to potentially take profit. Now, if we kind of extrapolated this out now, and let's say we went on a vertical shift to the moon, it would actually be about 41.10. And then we would maybe be even going to 41.60, depending on how slow it moves up. But just remember this, you have just witnessed history. And I always get excited about history on this channel because why not? It's a historic month. We just achieved over 4,000 on the S&P 500, and many traders may not even be around during one of these 1,000 point moves. This is pretty rare. I've only experienced a few of these in my trading career, and it's been the time 4,000. So look, 3,000, 2,000, 4,000, they're all exciting numbers. Maybe you guys don't care as much, but I do. 4,000 plus is pretty awesome. And now we can move towards the great trend line. And I think, look, everything here looks bullish. If you're bearish at this level, the problem with it is there is no price action to support our bearish intentions yet. There is mostly indicators supporting it, and indicators don't always get the job done. If you've enjoyed this video, please remember to give us a subscribe and hit that like button. I wish everyone the best this week. We'll be covering the markets as always. Monday live stream will be fire. It's going to be an exciting day in the markets, and I hope to see each and every one of you there. Bye for now, guys, and of course, have a happy Easter. Enjoy your time with the family. Maybe take a little bit of time off from the charts. I know even I probably will. Bye for now.